Joining us right now is Caz Investments founder, chairman, and CIO, Chief Investment Officer Christopher Zook. Christopher, good to have you this morning. Thanks very much for joining us. Your reaction to what's taking place as markets react to this uncertainty between the U.S. and Iran. Should we be trading on this, or is this something that investors want to look beyond?
Well, good morning and Happy New Year, and welcome to the Cold War of the 21st century. I think that investors have to take this seriously. I do not think that this is something that is going to dramatically affect earnings in the near term. But at the same time, I think that we're entering into a new level of risk that the markets definitely were not thinking about a week ago. And so as a result, I think investors need to follow the adage of sell when you can, not when you have to, and make sure that you're positioned properly for an environment that has a lot more risk than it did a couple of weeks ago.
Yeah, but look at what's gone on with trade. I mean, the risk has almost been taken away there. You've got USMCA. It could soon be a done deal. As soon as this week, by the way, White House Trade Advisor Peter Navarro laid out the potential timeline with me yesterday on Sunday Morning Futures. Listen to this. What are your expectations in terms of USMCA?
We're going to get that passed as early as Friday or Monday. Here's how it works out. My good friend Senator Grassley is going to mark this bill up on Tuesday in the Finance Committee. Once it's marked up, Leader McConnell will then have the opportunity to put it on the floor. And the beauty, Maria, of fast-track legislation is that it's a maximum of 20 hours once it goes to the floor for the vote. We've got a large bipartisan support in the Senate, so possibly this week we could actually do some great people's business.
So what you're saying is you think this could head to the president's desk within a week?
It absolutely could.
Christopher, what about that? So you've got USMCA heading to the president's desk potentially within a week, and then the China deal. Peter Navarro also said that the Beijing delegation is coming the week of January 13th to sign phase 1 on January 15th.
Well, I think all of that is extremely good news. And don't get me wrong, there's a lot to like about what's going on in the economy. There's a lot to like about what's happening in the fundamentals of businesses right now. That's the reason this market has done what it's done over the last 12, 15 months, multiple years, is because of the fact that we've had good news. The reality is that I think the majority of the trade deal getting done has been priced in, and I think we've seen that over the last 30 days. Now the market, being a forward-looking animal, is going to have to reset and say, what does the election look like? What has this confrontation with Iran got the potential to do to, impact the economy? And it's going to be a real different environment than I think we saw in 19.
Christopher, Mitch Rochelle, good morning. Are there any sectors in particular that you like because you have heightened geopolitical risk? Are there any places that are perhaps safer than others for the short term?
We have actually been involved in the gold markets and the silver markets here recently. We've also been building positions in the energy space, not because we saw something coming in Iran. Obviously, nobody really saw that coming. But what we did is we saw valuations that were getting very inexpensive, particularly in the mineral space, where you get a tremendous amount of yield while you wait potentially for prices to improve. We're now getting some of that pricing improvement, so we feel like we've got a good yield with a call option on higher prices, which now, because of what's going on with Iran, could actually give us a little bit more tailwind than we thought we had even a couple of weeks ago.
But gold and silver, as hard assets, they don't produce income.
Correct. And that's one of the biggest challenges. The gold and silver is a trading vehicle. It's a way to position strictly as a portfolio hedge or to take advantage of weakness and to sell into strength, like we've seen here the last couple of weeks. Energy is going to be much more of a secular type opportunity, or much more of a 12 to 18 month type opportunity.
And so real quick before you go, Peter Navarro said we're going to see growth closer to 3% in 2020 than 2%. So he's looking at 3%. You've also got earnings beginning next week. Would you be buying stocks going into all of this?
No, I would be a seller of stocks today. I think you have to look at it from the perspective of, I wouldn't go out and sell everything I have, but I would trim on balance, and I would be a better seller, not a better buyer right now.
All right, we will leave it there. Chris, it's good to see you this morning. Thanks so much.
Thank you very much.
Christopher Zook joining us there.